The first big tax bill is what destroys most 1099 tradesmen. The number that saves you is 25 to 30%, but if you do not understand why, you will still get blindsided. So stay with me because this is the part nobody explains. You have a great year, the work is steady, the money is good, you feel like you finally made it, and then tax season comes and the IRS hands you a bill for $15,000, $20,000, $25,000. Money you do not have, money you already spent. I have watched it happen to good tradesmen over and over, not because they did anything wrong on the job, but because nobody ever told them one number. So today I am going to tell you exactly how much you should be setting aside for taxes as a 1099 tradesman. Not a vague guess, the real number with the real math for someone who actually works for a living. I am a senior financial analyst. I build financial models for a company for a living. And I started this channel because the personal finance world does not make content for tradesmen. So let us fix that right now. So like I said, here's the short answer. As a 1099 tradesman, you should set aside 25 to 30% of every dollar you bring in for taxes. If you remember nothing else from this video, remember that. 25 to 30% off the top before you spend a dime. Now let me show you why, because understanding the why is what keeps you from ever getting blindsided. When you work a W-2 job, your employer takes taxes out of every paycheck before you ever see the money. Social Security, Medicare, federal income tax, it is all withheld automatically. By the time you file in April, most of your tax is already paid. A lot of W-2 workers even get a refund. When you are a 1099 tradesman, none of that happens. The full amount hits your account. Every dollar looks like it is yours, but it is not. A chunk of that money belonged to the IRS from the moment you earned it. You are just holding it for them. And here's the part that catches tradesmen off guard. As a self-employed worker, you actually pay more tax than a W-2 employee on the same income. It is called self-employment tax. Here is why. For Social Security and Medicare, a normal employee pays about 7.5%, and their employer pays the other 7.5%. When you are self-employed, you are both the employee and the employer, so you pay the whole thing, 15.3%, on top of your regular income tax. Let me put real numbers on this. Say you are a tradesman, and after your business expenses, you netted $90,000 for the year. Your self-employment tax alone is about $12,700. Then your federal income tax on top of that is roughly $6,000 more. So your total federal bill is around $19,000. That is more than 20% of your income just to the federal government. And if your state has income tax, add a few thousand more on top. That is how you get to that 25 to 30% number. Now here's the good news, because it is not all bad. Being 1099 also gives you tax advantages a W-2 worker will never get. First, half of that self-employment tax is deductible. The IRS lets you write off the employer half, which lowers your income tax. Second, there is something called the QBI deduction, qualified business income. It lets most 1099 tradesmen deduct an extra 20% of their business income before income tax is calculated. That is a massive break that salaried workers do not get. And third, every legitimate business expense lowers your taxable income. Your tools, your truck, your phone, your work boots, your home office. I have a whole free checklist on these, and I will tell you where to get it at the end. So the system is not rigged against you. It just was never explained to you. Once you understand it, being 1099 can actually beat being a W-2 employee. But none of that matters if you do not do the one thing that protects you. And this is where most tradesmen fail. You have to separate the money before you spend it. Here is the system. Open a second checking account, a completely separate one. Every single time a client pays you, every deposit, immediately move 25 to 30% into that account. The moment it lands, not at the end of the month, not when you remember, immediately. That account is not your money. You never touch it. It is the IRS's money that you are holding. When your quarterly taxes are due, you pay them out of that account. When tax season comes, the money is already there. No panic, no scrambling, no $20,000 surprise. The tradesmen who do this never have a bad April. The tradesmen who do not are the ones refinancing their truck to pay the IRS. And one more thing most tradesmen miss. As a 1099 worker, you are not supposed to pay taxes once a year. You are supposed to pay them 4 times a year, quarterly, April, June, September, and January. If you make more than $1,000 and you wait until April, the IRS charges you penalties and interest on top of what you already owe. Paying quarterly out of your separate account solves this too. So let me bring it all together. 1. Set aside 25 to 30% of every dollar you earn off the top before anything else. 2. Put it in a separate account you never touch. 3. Pay your taxes quarterly out of that account, not once a year. 4. Track every business expense because every deduction lowers the number. That is the entire system. It is not complicated. It is just nobody ever sat you down and explained it. If you do these 4 things, you will never get destroyed by a tax bill again. You will be the tradesman who is calm in April while everyone else is panicking. Now, to make this dead simple, I built a free 1-page tax deduction checklist. Every deduction most tradesmen miss, with the dollar amounts and the rules. It is completely free. The link is in the description. And if this is the kind of money breakdown nobody else is making for tradesmen, subscribe to the channel. I do one of these every week. The money stuff nobody taught us in the trades. Keep what you earn. I will see you in the next one.